Welcome to Zoo Town. It's a bustling, active economy where animals frantically trade goods and services using gold coins. But like any modern market, it faces unpredictable economic cycles. Sometimes the economy runs too hot. The cheetahs spend their gold too fast, driving up prices and causing inflation. Other times, things freeze up. The bears get nervous, hoard their coins for winter, demand drops, and the town slips into a recession. Usually, the town looks to the local government, the lions, to fix things using fiscal policy, which means adjusting taxes and public spending. But passing tax laws takes time. By the time the lions agree on a new budget, their fixes often arrive too late to change today's economic weather. That's where Mayor Owl comes in. He runs the central bank. He doesn't collect taxes, and he doesn't build bridges. Instead, he has a much faster, indirect way to steer the economy without forcing anyone's hand. This chart shows the composition of the total money supply. While physical coins and banknotes are the most visible part, the supply actually consists mostly of digital bank deposits and the reserves held by the central bank itself. Managing all that capital is called monetary policy. It's Mayor Owl's specific toolkit, manipulating interest rates, the money supply, and exchange rates to control aggregate demand, the total amount of spending occurring in the economy. Mayor Owl doesn't march into the market and demand that citizens buy or sell. He operates from a quiet control room, pulling levers that invisibly alter the financial incentives of every single animal in town. The most powerful lever on his desk is the base interest rate dial. Interest rates are the price of money, the cost to borrow and reward to save. By dropping the rate during a recession, borrowing becomes cheap for beavers and saving pays nothing for squirrels. This surge in consumption and investment pushes aggregate demand upward. But if the market gets too frantic and prices start soaring, he uses a contractionary policy. By cranking the interest rate up, loans become expensive and saving becomes highly profitable. The animals stop spending, start depositing their cash, and the inflation cools down. By tweaking a single price tag, the central bank effectively controls the throttle of the entire economy's spending speed. Lever number 2 opens the central vault. This is how the mayor physically alters the total amount of currency circulating through the streets. In the real world, Mayor Owl's job is handled by major institutions like the Bank of England or the Federal Reserve in the United States. When these central banks need to increase the money supply, they can resort to the printing press, producing new physical cash. They can also buy up government bonds to inject fresh money directly into the banking system. They can also expand the money supply indirectly. By loosening banking regulations, the central bank allows commercial banks to lend out a much higher proportion of their customers' deposits. Whichever method they use, the result is the same. Flooding the market with liquidity makes it easier for everyone to get their hands on cash, directly boosting consumption and business investment. The third lever looks past the town limits. Mayor Owl watches the river trading post, managing how Zoo Town's currency compares to the neighboring jungle's money. This is foreign exchange rate policy. A central bank can intervene directly in foreign exchange markets. They use their own financial reserves to buy or sell foreign currencies, nudging the exchange rate up or down based on market forces. They also influence exchange rates indirectly through interest rates. If the central bank raises domestic interest rates, foreign investors see an opportunity for high returns. Their hot money flows in to take advantage of those rates, driving up demand for the domestic currency and causing its value to appreciate. When a currency appreciates, it alters international trade. Buying imports from other countries becomes much cheaper, but selling local exports abroad becomes significantly more expensive. While it manages the domestic economy, monetary policy also serves as the critical defense mechanism for how a nation's wealth interacts with the rest of the world. By carefully balancing these three levers, Mayor Owl smooths out the severe boom and bust cycles, keeping Zoo Town growing steadily with stable prices. So, if you are stepping up to the chalkboard for an economics exam, what do you actually need to remember? First, you must clearly divide monetary policy from fiscal policy. Fiscal policy is the government adjusting taxes and public spending. Monetary policy is the central bank, manipulating interest rates, the money supply, and exchange rates. Mixing those up will cost you marks. Second, when asked to define the money supply, do not limit your answer to physical cash and coins. You must include commercial bank deposits and central bank reserves to get full credit. Third, avoid vague statements about interest rates. You need to explicitly explain the incentive mechanism. State exactly how a change in the rate alters both the cost of borrowing for firms and the reward for saving for households. A modern economy is a delicate equilibrium. Managing interest rates, the money supply, and exchange rates is an endless balancing act, which means Mayor Owl's job is never truly done.